The VIX is a highly touted index on media and in financial circles, but what it is and what does it represent? You may hear it called fear index, but that is not an accurate representation of what it is. In this video, I'll tell you what is it, what does it mean, and how to use it. What's up guys, this is Stockspert. I make videos about personal finance and investments. Let's smash that like button and subscribe to my channel to help me with the YouTube algorithm. Today's topic is the volatility index, VIX. I hope to give you more investment education so we together invest properly and get more returns. If you want to check out my other educational videos for beginners, the link is here and in the description of the video. And for those who is just starting with the stock market, I would recommend an eToro commission-free social trading platform. You can sign up by the link provided in the description. And now we are ready to go. What is it? The VIX is a real-time market index representing the market's expectations for the volatility for the upcoming 30 days. Note that I said expectation, so it is not representative of what is happening right now or what will happen. This is a very important point. It is just a general assumption based on the premiums investors are willing to pay for the right to buy or sell stock. This premium in options can be loosely defined as risk. Just like other forms of insurance, the greater the risk, the higher the premiums. And the lower the risk, the lower the premiums. When the options premium fall, the VIX falls. And when the premiums rise, the VIX rises also. Developed by the Chicago Board Options Exchange in 1993, the CBOE Volatility Index, the ticker is VIX, is one of the most widely accepted methods to gauge stock market volatility. The VIX is not set by any one person, but rather the result of the millions of transactions by the millions of traders around the world. The buyers and sellers move the option prices. More buyers and the prices go up. More sellers, the prices go down. The VIX takes a weighted average of all these option prices in the S&P 500 index and derives a single number which is called VIX. This one VIX number gives us a general idea if investors are paying more or less for the right to buy or sell S&P 500 index. So what does a number mean? For those interested in what the number mathematically represents, here it is in the most simple terms. The VIX represents S&P 500 index up or down percentage move annualized for the one standard deviation. Example, if the VIX is currently at 15, that means based on the option premiums in the S&P 500 index, the S&P is expected to stay at a plus minus 15% range in a 1 year, 68% of the time. This is one standard deviation. Is it high or low? Historically speaking, the VIX below 20 means that the market is forecasting rather healthy and low risk environment. However, if the VIX falls too low, it reflects complacency and it is dangerous, implying that everyone is bullish. Remember the story of Shoe Shine Boy. If everyone is bullish, there are no buyers left and the market comes tumbling down. If the VIX heads higher than 20, then fear is starting to enter in the market and it is forecasting a higher risk environment. If it goes too high, then everyone is singing the Chicken Little song. Remember, the VIX is not set by any one people or groups of people. It is solely determined by order flow of all buyers and sellers of options. If we look at the historical points of the VIX, we see that during the height of the crisis in 2008, 2009 and recent March 2020, the VIX rocketed to levels far above 50. Think about that for a second and what that means. For our understanding of the model, the options are pricing that the S&P 500 index will be in a range of 50% over the year, 68% of the time. At one point, the VIX spiked to 85. Those are insane levels that can never be maintained for very long. So where's the mean? That is a very good question. There is perception and mathematical reality, and the VIX lies somewhere in between. Is the VIX correct? I believe the volatility of the VIX is a direct representation of man's inability to effectively understand risk and price the unknown. The VIX has the same human flow of perception that is found in the equity markets that frequently drive stock prices too high or too low. Human perception can easily lead to greed or fear rather than focusing on mathematics or fundamentals. It is very easy to get sucked into this craziness, so the logic, reason, and wisdom are cast aside as we are driven by irrational greed or fear. Also, there might be a hidden volatility. This happens when the volatility in both the equities and options premium contract. This is usually a huge warning sign for us that the market will see a rather large and violent correction, usually to the downside. We can summarize that the VIX is a helpful tool and indicator. It gives us a current and accurate measure of where options premium in the S&P 500 index are trading. However, it is very important that we understand that the VIX is not right or wrong in its current or forecast measurement of S&P 500 volatility. It is just where the market is willing to trade the premium or current measurement of risk. At the extremes, we see that it is wrong and tries to compensate quickly as buyers quickly become sellers and sellers quickly become buyers. It is driven more by perception and human condition of fear and greed than by any other force. VIX can be traded in cash-based options and futures index, and also it is included to some exchange-traded funds. Here are some VIX options and futures products. The VIX options and futures can be used to both hedge a long portfolio or even used to take a position in the VIX. It is important when trading the VIX products that you understand its inverse relationship to the equity market. The VIX will usually rise in price as the stock market, usually the S&P 500 index, falls. The most frequent problem that beginners have is understanding its inverse relationship. Please comment below if the video was useful and what can be done better. I really appreciate. Don't forget to smash the like button and subscribe to my channel. Thanks for watching and see you next time.